Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Before we start, everyone, please hit the like and subscribe button. It really helps us grow tremendously. Our guest today is Larry McDonald. Larry is the founder of the Bear Traps Report, and he has his bestseller book is called When Markets Speak. I highly recommend everyone to go get it. Welcome back, Larry.
And we just came out in paperback.
Oh, nice,
How
nice.
to
Yeah,
Listen to Market Speak, and it's been top five on Amazon all year. It's a must read, especially right now.
yeah. No, I highly recommend everyone to get it. Larry, thank you so much for coming back.
Thanks, Ivan.
Yeah, I wanted to ask you, just today I actually looked in the news for gold, and Italy now is planning a one-time legalization tax of about 12.5% on undeclared gold, to convert it to approved gold. You know, if citizens want to keep their family gold legally recognized, they must pay the state, a state tax. What are your thoughts on now, Italy trying to approve this where they want to put 12.5% tax, legalization tax on undeclared gold?
Governments around the world are in such a bad situation because you think about just AI, right? And this financing that's going to be potentially another $7 trillion of investment grade bond issuance, and it may be junk issuance at some point. But in other words, everyone needs money. The U.S. government needs money. France needs money. Japan is now fiscaling up again. Japan has a lot of bonds for sale. Yeah, and they need revenue. Yeah, they need revenue. They need tax receipts. They need all kinds of creative ways to come up with cash.
And Larry, we have some like really exciting news that's happening right now in the precious metal space. You know, just looking at the silver prices, we've blew past the $56 mark. We're at 56.72. There was so much talk about that correction for the longest time in the past month or so, where you had that correction. We're in a cup and handle. Now it's taking off. What are your thoughts? Your thoughts like are we kind of passing that correction mode right now? What are your thoughts?
Well, we were on here a year ago, year and a half ago, pounding the table on silver and gold, especially silver. The gold still silver ratio is still at a point, it's just around 80 below where you want to be buying silver. And so, gold's made that big move. The gold Bitcoin ratio is also in the sell gold, buy some Bitcoin zone, which is rare. In other words, the last year, all of our indicators on the ratio have been, buy Bitcoin, I'm sorry, buy gold and sell Bitcoin. And
Mm-hmm.
now the outperformance of gold versus Bitcoin over the last year is one of the greatest that we've ever seen. And so there's a lot of central banks in gold. So yeah, right now I'd be kind of like lightening up on gold, buying more silver, buying Bitcoin, buying things like oil. I mean, the oil gold ratio is at COVID levels. Same thing with copper versus gold. So gold versus copper says to buy copper. Oil versus gold says to buy oil.
Mm-hmm.
Bitcoin is not as strong a signal, but it's in that rate of change period of time. It's a lot of things point away from gold toward other metals.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
And other assets.
Is there anything you have your eye on, or is there anything that you've been thinking about recently that's concerning you?
Well, just this Greenlight Capital, David Einhorn's out over the weekend with a note around the financing of AI and the cash flows relative to, in other words, the cash flows from what we call the hyperscalers, Mag 7. There's just nowhere near enough money to support this. And even if they cut all their dividends and turn their dividends and stock buybacks into AI spending, there's just not enough capital. And so that's a big thing where in my career, Ivan, we've seen this multiple cycles where investment grade companies and say the oil and gas space, they lever up to get long to basically create shale
Hmm.
production from 2010 to 2014. So you had all these investment grade companies that went to junk. Same thing with with the global internet companies where they were spending money on Global Crossing, for example,
Hmm.
on communications. We saw a huge massive leverage buildup in communications, which then created a move toward junk credits. And then in finance, you had
Hmm.
investment grade companies that we talked about in my first book, Colossal Failure of Common Sense, about Lehman Brothers. But there you had real pristine balance sheets in 2003, 4, 5. All of a sudden, they levered up, and you had a lot of companies move toward below investment grade to junk. I think the same thing's now happening here with AI spending and the big tech companies.
So it's safe to say we're in an AI bubble.
Yeah, we're in not just an AI bubble, but it's not financed. In other words, there's like this whole you hear about the circular financing. When you actually dig into it, like Janice Henderson's out with a note this morning, man, you're just really at a very important point where there's not enough financing.
Hmm. What do you have your eye on right now that's piquing your interest? Like, is there anywhere that you're putting your money into, or you think it's nobody's looking at?
Right now, the tax loss basket that we're building is one of the most exciting so we do this every year. So we look for what we call category 5 capitulation selling, where your distance below the lower Bollinger Band, your acceleration, capitulation volume, your RSI, all the indicators point toward a spectacular year for tax loss candidates. Companies like Target, Diageo, Lululemon, say CMG in the restaurant space. Look at the restaurants. The average restaurant's 31% off the highs in the EATZ ETF. So the difference between the market's 4% off the highs, but the average stock is actually crashed. And there's some really good opportunities. I love Diageo down here. Love Lyondell in the chemical space. But anybody who wants our basket, they can reach out to us at info@thebeartrapsreport.com.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the
Com.
video. Is there any advice you would give right now to, people who are in precious metals, or even just like the youth or the people just starting out in precious metals? What would be your advice to them to starting their investment career?
Well, the bottom line is there's 31 trillion in the NASDAQ 100. That's up from 12.5 trillion 4 years ago today.
Mm-hmm.
So if you look at the amount of wealth in the S&P 500 or the NASDAQ 100 that's actually in companies that own gold and silver, we're nowhere near. We're light years away from the 80s. So at the end of the day, there's a lot of money in what we call growth stocks and technology. If 5% of that comes out and moves toward hard assets, and we've already seen some measure of this, you just have so much upside as a young person the next 10, 20 years. Like, in other words, Newmont, your Barracks of the world, they're going to be much larger portions of the S&P 500 than they are now, 5 or 10 years from now.
Mm-hmm. Right now, you're looking at silver prices. They're reaching that $51 mark. Gold prices are moving up. Do you have any price targets from now until going into 2026?
I think silver 65 this time next year. I think you could really get a nice move in silver. Gold, I mean, we could have a nice move in the first half, but then, we're coming toward the election, midterm election next year. So I just think gold, maybe you kiss 5,000, but I just think the risk reward in the coal space, in some of the natural gas names, is a lot. The commodity space is like a tale of two cities. There's commodities like coal and natural gas that are really cheap, especially relative to artificial intelligence, and everyone's crowded into gold. So I think near term, I want to be diversified.
Hmm. Would you, you said earlier in the interview about getting into oil because it's undervalued, compared to gold. What would you get into, like stocks like Halliburton, or what would you get into for oil?
Well, I just think of Buffett. He's got 12.25% of his portfolio in Occidental and Chevron. And then on the technology side, he's dumped 700 million shares of Apple. So that's one thing that you can see Buffett's selling. And even his Google position is tiny, less than 1.7%.
Right.
So so that's where I think on the oil service side, your Weatherfords of the world, your Schlumbergers, that's a spot which we really like. And then on the gas side, Energy Transfer, we're going to need to move a lot of that gas around the United States. And ET pays a beautiful dividend, uh, great balance sheet. That's a place you want to be for artificial intelligence.
Absolutely. Well, Larry, I want to thank you so much for coming down and speaking to the precious metals community. Before you go, though, where can they connect with you?
Well, one is info at thebeartrapsreport.com. Our book's on Amazon. We're at ConvertBond on X. We
Nice.
appreciate you, Ivan. Thank you.
No, thank you so much. Everyone watching this, highly recommend you go follow Larry. I'll put the links in the description below. Every time we talk, we have really nice, interesting topics to talk about. So thank you so much, Larry, for coming down. As the market develops, we'd really love to have you back on soon.
Thanks, Ivan.
Talk to you soon.
Okay, bye bye.